and then that end of day drop, closing bell drop, it was ridiculous drop. And this morning we've been just sort of treading in the middle in pre-market, and now we're pulling back just a slight bit. We're probably going to open on the, would you say, on the scary side of price. Let's put it that way. On the scary, to put some fear into the market, that's probably what's going on here. Now let's put this over here. Marcus, good morning to ya. All right. So as far as big caps or non-small, non-micro caps, we got Carvana that are gapped up this morning. Carvana is up 38%. Wow. That's amazing. Now, just FYI, I know you hear, big jumps like that, and we all have the same genes, you get that FOMO. You get that FOMO for like, what could I have done? Maybe I should research how to create, bets on things doing that. And I get it, but like I'm telling you from experience, betting on coin flipping. And by the way, whenever you're betting on something going a certain way because of something, you're flipping two coins because you're flipping the coin that the thing that's supposed to come out, occur, happen, the event, whatever it is positive or negative. So that's a 50-50. And then additionally, you're hoping that the stock, you're hoping to get that right. And then you're additionally hoping to get the reaction will be positive or negative, will be the way you want it to go, and that coin flip right. So you're wagering money on a 25% chance. That's what the probabilities are there. 1/2 times 1/2, or 1/2 squared, which is the number of iterations. So that's 1/4, 25% chance. So you're 75% chance to lose, 25% chance to win. Hey, sometimes that's okay. If you could, because in order to break even on that, you'd need a 4-to-1. You need a 4/1 in order to make that a 1/1. There's a whole hell of a host of problems with doing those kinds of trades, though, which is that law of large numbers, is that you might need to do 1,000 before you actually see the probabilities pan out. And the variance on a 75% to lose bet will kill you, will wipe you out before. If you run the math, it'll say something like, if you were to be doing that all the time, even with good position sizing, there's probably a 100% chance you'd lose everything you have within 1 year. So anyway, you can't do it, and it's just that's the way it is. That's the way it is. So instead, you piggyback on other strategies. You piggyback on the move after it's happened. You do after the cat's out of the bag strategies. And those are just as fine and more reliable and controllable, and you can do something with them. So anyway, here on Carvana, I mean, we'd love to do something with that, get a PCS if so. But let's take a look at that because that's way up. That is way up there. Let's see. So in the grand scheme of things, this has rolled back all the way to April 2022. So this is a 2-year price level here. And price has been coming back perfectly steadily off this bottom, which tells me that there's no resistance, which it tells me that all these people back here that got trapped by prior, that got trapped underwater, got out. They took their money back. At some points here, they got out. Not to mention that's what caused the price to go down. Everybody getting out. So, and then everybody got out again here. It went lower because of price projections and earnings, et cetera. And then, it started to turn around fundamentally, and people were not getting out, they're getting in, and you're not seeing resistances, and everything's moving and flowing. So to me, the prior history in Carvana is non-existent. It got wiped out, obliterated. It's kind of like an IPO. It's very fresh. It makes a lot of sense because it was looking really bad back there. Everybody just moved their money, but it's all moving back into it again on whatever prospect. I guess the fundamentals of the growth prospects look good here because the reaction in pre-market is fantabulous. But the thing is, price, this is now, let's get into some gap theory analysis here. Look at what we have is price was moving up already. Everybody got positioned before and including yesterday, like by a lot of people getting on board, getting on board, getting on board in Carvana. Now, I don't care if it goes up from the open. If you're in and this thing starts going up, what's going to happen? Let's take a shot in the dark here that some of you are paying attention and see if you can tell me what's going to happen if, let's say, this thing opens up 38% up from yesterday with everybody in it recently. And, by luck would have it, just like luck, just the forces of maybe a hedge fund is buying, price goes up. That's like a distant possibility, right? Price goes up. But yeah, Michael, people are going to be taking profits. They're going to be taking profits into strength. And by the way, a stock being up 38% is strength. So in other words, they're going to be taking profits into strength if it happens intraday, like things going up, because that's a great time to be taking profits because it gets met with equal result. But probably there's more people that are going to be selling than buying at a 38% boost. Like who wants to get in that extended? So this thing, I mean, the gap theory analysis is not even that deep. It's just oops, wait, Michael, you went on mic. Did you want to say something? No, okay. Uh, the gap theory analysis is not even that complicated. It's simply, hey, people bought before this happened. It's now a catalyst pivot, extreme gap up, 38%. And the gap theory analysis says that everyone's going to be taking some profits. Who's going to stay in? If you stay in, number one, it's not pushing the price anywhere, is it? If you stay in, nothing happens to the price except you watch it. If you're passive here, then everyone else is controlling the game. If you're passive. So if you're a passive player, that's the wrong move because you either want to buy here or you want to get out here. Those are the two options. You want to buy here or you want to get out. Now, everybody in pre-market wanted to buy. Obviously, the price got pushed up all this way, but when the giant voting machine opens at 9:30 in 20 minutes, I think we're going to see more pressure than that. And hey, maybe it won't do a full retrace and maybe there'll be a 5-minute dip buy. Hey, we'll take it. This is a pivot breakout right here. But for the most part, there's going to be a lot of selling pressure. So that's what you expect. Does that happen all the time? No, but I mean, at least we have some kind of a plan there. So I'm going to put Carvana on the radar here. And yeah, I'd be so reticent to be taking any position, but I mean, look at this. It keeps tightening and tightening. I mean, if it does break to the upside, I might get along, but I don't know. That'd be a lot of pressure. But sometimes these things that are up this much, they call it a breakaway gap. They just break and run and never look back. And that's a possibility. But that would come from extreme hedge funds jumping in, institutional buying at mass levels. unprecedented. They've been waiting for this report. You know what I mean? So that could happen at the open. There could be some allocations going on the demand side. And so if that's the case, then 122.25 is the pre-market high. 122.50. 122.50. If that breaks, that's a signal for long. If it then whips back, like, fakes out, then you got to fall back to a 5-minute dip buy strategy and watch your stops. I would put your risk size at about 117 and stop out at 117 if you get in. But, probably there's a much bigger chance, 65 to 70% chance that right at the open it's just going to be market sell orders. It's just like, who wouldn't just go, I'm not going to fuck around. Let me just take half. I mean, a person with a large position could take 10% out here and it could move the stock down. I mean, there's just going to be selling. Selling is on the mind. But if there's buying on the mind, it's going to have to come from new, large, smart money sources. Otherwise, it won't be effective. There's just too many people, everyone, interested in taking some profits here. Being passive is not going to change anything. So you have to think, okay, what are the active people going to do? All right, so that's Carvana. Very nice. We'll be watching that. The $1.2 billion company, Aspen Aerogels is way up on earnings, and we don't like this pattern too much at all. Wait, hang on. Hang on. Anyway, it is biotech, so probably. So I would watch out. Industrial specialties, aerogel insulation, primarily in the energy infrastructure and building materials. Okay, never mind. Products include cryogel, pyrogel, and space loft. Apparently, they thought, whoa, look at this curve over here on the fundamentals. Just looking at that, that looks like amazing. Quarterly and the annual growth. They've been doing great, and now they're $20. And okay, so that could be something. ASPN that ends up getting bought up. I doubt it has the option liquidity for us to get PCS spreads in it, but there's share opportunity there. ASPN, and it's only a $1.2 billion company. ENVX is another one. No, that hasn't hit any particular pivot points that we'd be excited about. $8 stock, and we got Car. What is that? Is that Hertz? Oh, Avis, I mean. Avis, okay. All right, Avis, that's been in a super slump. This earnings, I guess, was very good. It's neither here nor there. It didn't break pivot. But what I'll do is I'll put an alert line on there so that we know when it is getting close. It looks like the line in the sand is like 123.73. So I just click that, and then I click the little alarm clock there, once per bar if it happens on the daily chart. And then I change that to my alert line template. So every time I look at it, I know what's going on. Now we can leave that for a few weeks, or if today it were to move up there, great. All right, $7.7 billion company, XPEV. I forget if that's Chinese. Oh, XPeng, yeah, it is. I would just stay clear of Chinese, by the way, but this doesn't even look like a good setup or opportunity anyway. 1.5 billion Upwork. Yeah, downtrend, stuck around the 200. That's where it's sitting right now at the open. Nothing good there. 5.2 billion Beely. That's Chinese. It's going to slam down fast. I mean, probably, yeah. But just be aware that sometimes if things do the opposite. I mean, imagine if there's a lot of short interest on it. I don't think there is. Maybe there is, but those shorts, they're going to be passive at the open, hoping it sells off, and they're going to be trying to cover their shorts by buying. So that's another thing is you get the kindling effect of you got shorts that have to cover their asses, and so you get some more extra support. Let's see, and it is set up to break away and run. 5K, $52 billion company, ING. I think that's an insurance company. I think so. Anyway, the liquidity is way too low, but that's nice. That's a nice jump. $183 billion Qualcomm, up only 6% now. We're talking 6%. We're getting close to common area gaps. C, A, G's. CAGs. CAGs are just, they get filled. They tend to fill. But it is in a domino-ish effect area, and that's Qualcomm, and it is liquid, 2.4% ADR typically. What do I mean by domino effect is that it it's opening right here. It could then break this candle's high, which then breaks this candle's high, and now we've broken pivot, and that sends it with a little energy up to break this recent high, which is, oh, it's a multi, I think, year high, like a 2-year high. So Qualcomm and Carvana both potentially breaking 2-year highs today. I'm not super interested in Qualcomm here. It's not quite set up correctly, but I will put an alert on it to let me know. Might as well, flip over to it and see what's going on if it does. We don't need to be stupid. Yeah, add alert. Boom, I put the little alarm clock there. Uh, Going down the list, I mean, these are all now common area gaps, but I have my filter from about, I think it's 3% and up. $11 billion Neo. Yeah, up negligibly and not anything going on there. WRK. Okay, that's like a Carvana situation. Um, a little bit better even because this is like the moment they've been waiting for. However, looking at the fundamentals, I don't know. I don't know if it's got it. 1.5% roughly ADR anyway. But this is a breakaway gap, catalyst day, pivot, breakout, breakaway gap, and it was going roughly down for the most part before the earnings. So that'll get bought up and be green. So see how the gap theory analysis, same thing, but because of what happened prior to there, your expectation probability is different. Anyway, this is only a small gap up 6%. There's really nothing left to look at there. PDD only up 3%, but that's a huge company, 138 billion. Yeah, it's not in any kind of setup or formation. All right, so we're just basically watching Carvana and Aspen. I'll do a quick liquidity check on Aspen and Randy. Make sure all of you who are interested in checking options, historical options liquidity, so you're not getting yourself into a bad situation. You need to sign up for the free Market Chameleon plan. It's free. And then you are able to see 1 year's historical option liquidity. With a paid plan, you can get 5 years. But so for free, and all we need is 1 year. Like what's it been like lately? So that's free. And if you're serious about doing this kind of stuff with spreads, you need to know what you're getting yourself into so you don't get trapped in something. Let's check ASPN option liquidity. I mean, if you want to see what this looks like, go. See, it's very thin. Other than little blippy days, little boop bop boop. But other than that, it's very low. 1,000, 300, too low. Now let's check Carvana. Carvana looks great. I could probably pick one of the lowest days and it'll be a lot. Let's see. This is like the lowest day right here. 28,000. That's the lowest. The average is probably right around here, which is like this stick, 115,000 liquidity. So there's lots of liquidity. And then of course on catalyst days, like this one, 565,000. I mean, this very liquid. It satisfies the requirements for liquidity. Carvana definitely could mess around with that. Get a put credit spread. You did not see a free 1 year option. I'll look again though. Um, I don't think I'm paying. Let me see my account. I'm looking right now. My account. There's two my subscriptions. Let's see. Shit, maybe I'm paying. You don't currently have a subscription. No, you register and then you're in. You're able to log in. And then when you see things, um, some of them won't be accessible. They'll be, what do you call it? Gated by subscription gated. All right, we've got 7 minutes until the open. So Aspen and Carvana. Aspen, no go for PCSs, but maybe for shares. Carvana probably going to sell off. Watch Carvana on the daily like that. And ASPN. That's on the daily. So this is how these things, I like to see how things, look on the daily. If the more and more you do this, the more the daily chart is you know, like a very important to you. It's sort of like the daily, the the intraday chart tells you if the waves are good and you want to go out, the intraday chart, the waves are good, and maybe right now you see the sun is shining and you want to go out there and surf, right? But the daily chart helps you understand whether or not you should buy the plane ticket to go. You see? So that's how, it's helps you really get the bigger overview. 6 minutes till the open, and let's see if there's anything else that we should take a look at. And let me know if I missed any tickers that might be from earnings or whatnot. Tesla is initiating coverage. Cantor Fitzgerald overweight rating. Dan Zanger, world Guinness Book of World Record trader for having achieved more than 32,000% returns in the shortest amount of time. I think it was a year and a half. Says, and he's an amazing trader. That was not by luck, like others could potentially have. Says it's a good time to be sitting in cash, waiting for better bases and patterns to buy from right now. But I still am in a mini position, not too many. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 that I almost would consider non-positions because they're all iron condors. They're fully hedged. They're sideways positions. So there's 9 neutral positions. They can go either way. Doesn't matter. And then I've got 1, 2, 3, 4, 5 bearish positions, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bullish positions. So my portfolio right now, and I released my hedges yesterday. So my portfolio right now is a little bit unhedged. I don't like that, considering the drop at the end of the day yesterday. It's like a market rug pull at the end of the day. So today, what I would be doing is I will be looking to skim my bullish positions, maybe add a bearish position. If Carvana just starts bleeding and it looks like unrecoverable, it's going to be, that's going to be the sentiment on the day. I'll get a call credit spread on Carvana at the 20 delta, which would be higher than the high of the day for a bearish stop level, essentially, for a call credit spread. It's a bearish position. So I might do that, to add on Carvana. But if Carvana is along, I'm gonna definitely I'll take that. I've been in Carvana so many times this last year. Very liquid and a money maker. Amazon Web Services launched in 2006. Sales that year were 21 million. AWS services in 2006. Wow. So now they make that amount every 2 hours. That's fucking insane. Amazon made its first year of Amazon of Amazon Web Services AWS in 2006, 21 million the whole year. Now they make that every 2 hours. Wow, what a statistic. DPZ, what do they have in common? Think about it. If you I don't know. Let me take a look at DPZ. That'd be the pizza, Domino's Pizza. See, that's a call credit spread type situation on DPZ. rejected this price twice. I might take a bearish position on DPZ if the options look favorable. I'm not going to pull it up over here, but it takes too much time at the moment. But let's see. I'll go take a look again in Market Chameleon at the liquidity. I type DPX, DPZ, DPZ. Historical liquidity. Okay, the average is about 2,500. It is a little thin on the option side of things. Domino's Pizza. So now I'm going to go over to DPC and just look at the spreads on what I would want to get. That'd be something like the 565 call credit spread. Okay, 560, 570, something like that. 4 on the bid, 560 on the ask, $1.35, 320. Those are all way too wide. See, I just love that. How the system itself keeps you out of trouble. When you're not supposed to take a trade because your rules say you're not supposed to, you don't. It keeps you out of trouble. It looks like a good opportunity, but then you don't get it. But you don't get in it because of the rules. NVO, Eli Lilly, VKTX. Those are the makers of the weight loss drugs. Okay. What was this? Each week, 25,000 new customers each week in the US for the weight loss. That's 5 times as wow. Let's take a look at that. NVO, we got 1 minute here. NVO. Wow. Yeah, look at that chart. Beautiful bullish. NVO. Eli Lilly. Also bullish formation. Very beautiful. And what was the other one? VKTX. I mean, that's astronomical. That's holy grail level. So obviously, good stuff going on between those 3 companies. Maybe you basket them. ERJ is another one. What about it? Do they do the same thing? No, that's aerospace defense. What about ERJ? Yeah, that's a beautiful looking chart. Yeah. 2.9% ADR. Oh, Colby says, I worked in that sector. Can't go into detail as NDAs are not fun to mess with, but I can say that no one can hold a candle to the rate they are growing. There you go. So it's like maybe faster than AI. Data centers are showing up all over the place. Oh, you're talking about AWS. Okay, way back there. Yeah, AWS, insane, insanely great. Yeah, but there's competition, but it's so easy and wonderful to just go with AWS. Why would you go with some lesser company to, securely handle your server needs? All right, Carvana at the open, QQQ at the open, ASPN. Well, I mean, already Carvana long right now. I don't have to rush for a short. Already the long in case it starts acting amazing. The long would be like the 90, 85. Oh, the liquidity is so nice and tight. Very good spreads. And for that, which is a 5, wow, that would be an incredible credit. Kind of unbelievable. Whenever it's unbelievable, it's usually not worth it. You're getting trapped. You're getting sucked in. Like, sure, I'll give you an 80% return on your money. Please lend me the money. You want 80% interest rate? Sure. Don't fall for the trap. Just because something is promising something at the end of the rainbow, amazing. Don't believe it. The more amazing the promise is at the end of the rainbow, the more you're getting screwed and fucked. The more chance you're getting screwed and fucked. All right, the market is selling off at the open here. Let's see what that looks like on the daily. And let's see if we have a strength from any other sectors. Staples are holding, so that's a rotation into defensives. That's a defensive move. That would mean possibly the VIX is moving up. Let's see. No, the VIX is not necessarily moving up. So we're kind of just futzing around. We've got NFP report in the morning, and So far, I'm not seeing that supported by the VIX. A down move. ASPN starting to semi-trigger as far as a share trade entry. If you wanted ASPN, that's on you. It would be a shares trade entry. Yeah, see, look at that. That's a never look back. Beautiful catalyst day. Um, looking breakaway gap. You get in now, stop at 1950. Boom, it's already at 2144. I mean, we're just talking about it. It's going from 21 now to 2150. I mean, I know that some of you who like to do shares trades might want that one. ASPN. Now, see, now Carvana is pulling back. The selling is happening. That is looking to me like it's under pressure to sell off. I'm going to give it a little bit more time, but probably I can go for a CCS actually on Carvana. So I'm going to start calculate that up and put that in just in case I want to grab that. And that would be the 160. What? That couldn't be. Where's the 20 delta? The 160. That is so probable that it won't get to 160 by June 21st. But it's not paying very well at all. So that is why you have to go probably to the 155, 160. Let's see what that pays. Yeah, that's not super good. That's a 23 delta for 14% return. That doesn't match up. That's not useful. So getting a call credit spread on Carvana is not really in the cards. It's not priced conducively. So I'll keep my order kind of sitting there if I need it for buying a put credit spread, but I'm not going to pull the trigger until perhaps a 5-minute dip buy signal or some other signal, such as right now. As a matter of fact, the breakout at 122.50 is what we'd be looking for. I guess I'll ready it. Well, I'm ready to pull the trigger if it does hit 122.50. That would be a pre-market breakout signal. And then you just got to hope that the PCS theta would decline at the rate that the stock would be declining. Like, look, let's draw it out. What we're talking about here is getting in at the breakout, which would be at the top here, a June 21. What was it? 90.85 for a dollar, so 94. Break even. Right there. So that's what we're looking at if we were to get it. That doesn't look great to me. I'd like to see a strong green move to believe in that. Because that looks like that could be zigzagging under that line all the way till expiration and just not a good place to put money. I need to see a little bit more strength. I might get in on a 5-minute dip buy if it was like down here. That would look a little bit better to me if price was red and down there, because I feel like that could get up and go retest and retrace 50% retracement within a week, and I'd be above water again. And then that whole thing could hold and create a consolidation and that trade would work out. So a 5-minute dip buy could probably work out. But I think an extended breakout type entry on this is pretty sketchy when you really draw it out and you look at it like that. Think about it. Yeah, not the best. To say nothing of getting shares. Imagine if you got in shares right there, your break even line would be straight across. I mean, you're giving yourself no buffer. But you could just be quicker in taking your profits. That's fine. But man, I sure would rather have some buffer. Okay, we'll keep that there as an option on Carvana. Looking for the 122.50 potential breakout for a long. I don't think I would take it. Looking more for a 5-minute pullback. We're on minute 7 right now. So we'll just switch this over to the 5-minute since we're switching out that way and we can easily see those candles and manage a 5-minute dip buy type of entry. Now over on the market, do I want to put my hedge back on? The market is dropping. Let's go take a look at the VIX and see if it's concurring. Yeah, a little bit, but this is like a bit of a consolidation range for the VIX and isn't a signal in any way. For me, getting above Gamma, my specialized Gamma settings could be a signal to put hedge on. I'll wait for that. In the meantime, let me go take a look at the rates, the 30-year rates, to see if I need to get that hedge back on. Yeah, everything's real crunchy, consolidatory right now. Maybe that's the way this day's going to go, but we're only like 9 minutes, 8 minutes into the market open. So remains to be seen. Looking at the sectors could give us some help. Oh, it looks like staples are moving down as well. So we have just general down move across the market, a lowering of the tides, and gold moving up from wherever it was when the market opened. So that's a move into apocalyptic safety. You might see, so that's not good. That's a lowering of the tide into apocalyptic safety. That's not exactly a good sign. Uh, you guys are like, can he stop saying apocalyptic safety? I've got money on the market here. Please stop saying apocalyptic safety. But honestly, I'm gonna go take a look at how much it would be to slap maybe a at the money or even in the money put on the Qs. I'm exposed about 50 deltas total. Let me see. I've got 127 positive deltas and 39 negative deltas. So 127 minus 39. So I need 88 deltas to be perfectly hedged. You were just thinking that, Randy? That's great. I need 88 deltas. So I go to the 21st of June. Should I go there? Yeah, probably. 88 deltas. Where's the delta? Delta. I need 88 deltas in the put side. That'd be the 453. That's a $3,000 option, but that would cover me perfectly in one slap. Just boom. So, and what's the liquidity on that? Not too high. I'd rather have the 450 than it's super liquid. I'll take the 450. It's a little less deltas, 84. That's really not that big of a trade-off for so much more liquidity. Oops, I'm sending the wrong one. This is the one. Okay. All right. So I'm hedged. Boom. Just like that. I got nothing to worry about now. I do have to potentially hedge my 30 years bonds if I feel like it. But there we go. I mean, that's how it works, folks. I went from a little bit concerned, stressed about my holdings to in a manageable spot here. Dash is flipping out. Either that's bid ask anomaly from liquidity or Dash is dropping like a ton of bricks and I got to get out. Let's go take a look. Oh, what the hell? It got held over earnings. That was my mistake. Very bad there, but luckily it's actually being bought up. So we'll see at the end of the day how that goes. I thought I got out of everything that had earnings the next day in my portfolio. This is an example of mistakes you can make. And there you go. That's probably my second mistake this year. You try to keep your mistakes under 3 per 1,000. 3 per 1,000 or under is considered mastery and excellence. If you can get your mistakes level at or below 3 per 1,000, you're doing good. If it gets higher than that, that's the bar. That tells you, that you need to work on some things or be more careful, or if you're higher than that. So it's April. No, is it May? And I've made a second mistake here. Not too costly, by the way, but yeah, it's a mistake. I mean, you don't want those. It was did not follow the rules correctly, which was to get out before earnings. I did not. My system here did not alert me to that holding had earnings the next day, and I was holding it. Thought I checked everything, missed one. That's just the way it goes. But you guys should know that can happen. Don't forget you could make mistakes. In addition to just running a perfect system that works, don't forget about mistakes. Mistakes will happen, even to the best of us. I am human, yes. Let's see. But everything else is doing fine, just not the mistake. All right. And I'm hedged up, so I'm flat. So that's good. Even with the mistake, I'm flat. I think that because the non-farm payrolls are coming tomorrow, i- the market's going to be somewhat muted today. Let's take a look and see if that projects out like that. Because I have the end of day calculator that projects out end of day volume. However, it usually doesn't work until about an hour in. But let's see what it says already. Yeah, it's already projecting out that we're going to have a low volume total trading day today. So that's kind of like more on the doji side of things. And it lets you know that today, you can take it roughly easy. Look at our meters here. From the open, things are mostly red. Let's go over to Carvana. Yeah, that's staying down for the count. The the call credit spread or bearish trade on that doesn't pay. The probability, the pay doesn't match the probability or better, and so that would be negative EV. But it looks like that's what's going to happen on Carvana is that level 121.69 is going to become like a pinned point in the chart for never looking back, and it's going to be under pressure and underneath that level for a while. That hey, the day is early, anything could change, but uh, I certainly wouldn't mind if I end up getting in like down here on a 5-minute dip by entry. That looks a lot better for the curve, and actually, I think by now the 20 delta could be all the way down to 80. That could be looking like this, like a 79. Like that'd be a wonderful setup for it. So let me go take a look and see if that's the case. Randy says, would you go through your choice of strike on the QQQ hedge you made? Well, I went over to the 21st of June and I knew I needed a put or puts. And so, okay. And then the third thing was I wanted it to be not out of the money because that decays in theta very poorly. So I could and I needed 88 deltas. Remember, I figured that out on my portfolio. So I needed 88 delta. So I could have got 244 delta puts. Wow, that was really cool. Or 188 delta put. I went and looked at those, and the 454 was 88, but its liquidity was a little bit low. It was like 500 open interest. But the 450 put, which was 84 delta, was 18,000 open interest, and it's already traded 10 volume this today. So that covers me, and I got that one. That covers the 88 deltas I wanted to use to hedge my port. So that was the thought process on that. What am I doing right now? I was gonna go look at the Carvana trade in case the 5-minute dip by triggers. Actually, the 5-minute dip by did trigger right here. All right, so see, I want to get in there and potentially get that. And let's see, 90.85, 90. Where's the puts here? Okay, the 190, the 95.90 is what we want. The 95.90, and I'm not sure I'm in love with that angle. It pays fine. It's paying for the probability. It's good. And entry could be now, but let me see what that angle is like. 95.90, that would be the 94. That's where we were before. And right here, right now. Yeah, I think that could work, especially since it's a 5-minute dip buy, and 5-minute dip buys are pretty good signals. Well, I didn't get filled. It's out there. So that's a little funny. Like the liquidity is too low. 306 90s have traded. Only 595s have traded. So the 95s are a little illiquid. And it looks like things are moving down on it. and it could be failing. Okay, I want to cancel that before it's too late. It's about to get filled probably. Right when it fails, that's when they're going to put you in. Good, I canceled that. All right, it looks like it's not, holding up that 5 minute. I'd like to see it be a little bit more holding up. And what minute are we on? Yeah, we're nowhere near the end of this 5th minute cycle for this candlestick. And know, I'd like to have the confidence and know that the 5 minute candlestick is going to form an end and close green over red. That helps. You know, the uncertainty and the risk is very high at the beginning of the 5 minute cycle versus towards the end, because then it's put in. Then you're assured it's put in, say for any like last second just drop. But anyway, let's get it ready, cocked and ready again. 95, 90, 122 bucks or 378 is 33% return. That's too much. Again, that's really good, and that's a little scammy of a level. Oh, look, it just switched to 85. So that's not too good anymore. 85 out of 415. Now it's paying 20% to get the, well, 19 delta. But that pricing is a little bit more realistic. Now it says 87, which would be 21%, 90. There we go. So, but it's good to do those calculations in real time and kind of like know. So that way I know that, 85 is kind of pushing my luck. $87 is a little bit better. 90 is okay. But I'm also looking for that signal to hold. Okay, we're in the last minute of a 5 minute candle, and this is not the greatest looking candle. Looks like people are buying it up and they're gaining the confidence. But that price that I'm getting now is dropped to $80. So it's like I'm straddling two different uncertainties at the same time. And it would look like this. Yeah, let's see what happens here. We're at $87, which is good. We know $87 is a good price to pay. All right, last 25 seconds. It looks like it's going to hold. It's on $95. I'm going to take that right now. Wow. Why only one? Ah, damn. Come on. Oh, okay. $100. There we go. Boom. I'm going to take that. Ooh, right at that very moment. Damn, I'm in now. Right at that very moment, the close was looking a little bit less probable, but there, I'm in. And on a day trade basis, this may not work out. So if it breaks the bottom of this candlestick, that'll negate the 5 minute signal, and I'll probably just get out. So I gotta watch it right now. We gotta guard our entry. First priority, guard the entry. We do not want to see a new low. We do not want to see 114.24 broken. But I'm in a PCS now and very carefully watching that entry, safeguarding that entry. That's a bullish trade on the market right now, which is not looking great. Let me take a look at Dash and see if it's holding up or if I need to get out. And that's not holding up. It's going the other way. And so, yeah, that was that mistake. I've got to close it out now. It didn't, something like it didn't take my order. What the hell just happened? Oh, there it goes. Wow, that was really strange. Internet delay. Oh, looks like the 5 minute dip buy is working on Carvana. That trade's starting to work out. That entry starting to work out. It is in fact about exactly where it was when I got it. Let's take a look. Entry for me was 116.59. So that's where I want to put this 116. That's close enough. And the price I got was $1.23. No, that couldn't be the case. That's really good. Oh, I got a very good fill on that, huh? Let me go look. It says $1. What does that look like? Am I doing the math wrong? Oh, that's the current price. Okay. Uh, $1. Okay. Move that over to bullish positions. So $1 from the 95 sold strike is 94. So my break even is 94. And that's how I draw that line. Now look at the move from the open and all the growth stock picks there. Red, 80% red. Not good for the day. And then the top performing stocks right now on the S&P 500, most all of them red. So they have relative strength. They're doing better than the market, which is dropping, but they're going down too. So everything's dropping. Actually, gold is moving down, so we don't have a move into apocalyptic safety at the moment now. So that's somewhat of a good sign. Utilities are holding strong and staples are holding strong. Those are safeties. Utilities and staples. Financials dropping, and so are industrials. That's interesting. Oh, it looks like Carvana might be going the other way. Let's go take a look at that. Yeah, Carvana just broke that prior 5-minute candle's low. That's not great, but the stop has to be 114.24, the low of the day. A detailed look at that looks like this. On the 1-minute, and here's the 5-minute and the daily. We're just navigating Carvana entry here. And you can wait to the end of the day. That's perfectly fine. You don't have to follow my lead on that like that. It's okay to wait for the end of the day for entries when you're doing put credit spreads. Rates are dropping just a little bit. That's good. That should give a little bit of lift and support on the market. Good price action moment on Carvana. Moving up now. Gives me a little tinge of sensation that will probably be making a new high on Carvana this morning. Save for if suddenly just someone pushes the big red sell button, which is very possible at these levels. But if you are doing the 5-minute dip buy intraday trade strategy, remember that you take some profit at the open when it returns back to the open right there. And then a little bit more at the high of the day. And then from there, you can run like a 5-minute uh, bar by bar for your final exit, or there's lots of different ways you can set targets and profit targets, but eventually you're going to get out, whether you have a moving average line you're keeping using as a stop, trailing stop, or bar by bar, or just it's hit a very good level, you just take your profits. And let's watch the VIX at the same time. Now, can I type negative VIX? I forget. No, it doesn't work like that. But you are able to, oh, you could do VIX times -1. That's it. Boom. So now we get a negative VIX in TradingView, because you can do mathematical operators in your ticker. I don't know if you knew that. Nice little trick there. If you want to get the inverse of something charted, that's one way to do it. Also, you can like right click it and invert the thing, but I don't like to mess with my charts because then I pull up another chart and it's upside down because I've got that square set to be upside down. Anyway, this will tell me if there's any divergence going on between the moves being made on the market. I think we're good. We're coming up to 10 o'clock. Things are looking good. Let's move back into the group. Trade smarter, everybody. Stay safe, and see you back in the group. Thank you for tuning in.